Is this the final fall for the US dollar into a key week with US CPI eyed ahead of the massive FOMC rate decision next week on September 18th? Let's break everything down. So guys, this week is absolutely enormous for the US dollar and just for markets in general, because we have US CPI data, and this is absolutely critical. Obviously, heading into the FOMC's rate decision next Wednesday, okay, September 18th. And in terms of, what the FOMC decide to do, it's everyone's best guess right now, okay? It's everyone's best guess, but a lot of expectation for how that the outcome of that meeting next week will lie on these figures on Wednesday. Now, we're going to get into all the key sort of macros and just take a look at everything technically here right now. Now, firstly, we've been going over, obviously, this in recent weeks and within these last few videos in terms of why the dollar was trending to the upside. Those three key pillars were quick, very, very quick recap. Remember, dollar was supported to the upside by strong economic data. Dollar was supported to the upside by inflation remaining sticky. And the dollar was supported to the upside because the FOMC were keeping rates higher for longer in order to bring down inflation. Now, here, mid to late June, early July, dollar, those three key pillars that were supporting dollar to the upside eroded. Okay, because we saw inflation cooling, we saw the FOMC become more dovish, talking about rate cuts are coming, warming the markets up, and in three, data was just been worsening. So those three key pillars eroded, and what we did, which was really, really key here, we completely paired back. Those three pillars that supporting the price to the upside for the dollar, we completely paired that back. Now, for you guys out there that say fundamentals follow technicals, you're absolute idiots, okay? Absolute buffoons, okay? Because those three key pillars, without those three key pillars, the dollar wasn't going to be moving the way it did to the upside. Without those three key pillars being eroded, and we're seeing it with our eyes, right? The dollar wouldn't have headed to the downside as it did. And as I say, this is completely significant, the fact that we just made a statement there by pairing back that move, because that edge, those three key pillars that are giving the dollar the edge, right? That are giving us the edge to short euro dollar, to short GU, to short Aussie dollar, is now eroded, okay? And then it gave us the edge, right? By staying in tune with those fundamentals, it gave us the edge to short the dollar, to long euro dollar, to long GU, to long Aussie, so on and so forth, right? This is all macro driven. Can't stress that enough. Now, in terms of, look, guys, as I say, this week is very important. Look, we said about the dollar staging rebound because we had some decent data points a couple of weeks ago, didn't we? But then last week, markets just don't want to commit. That's all it is. There's this mixed expectations about what's going to happen next week. And as I say, things will become much firmer and clearer with these CPI readings on Wednesday. Now, here with the dollar, I'm just going to talk about scenarios for the time being, and I'll give you my opinion of what I believe will occur. If you look here on the monthly, as I said, I mentioned this via Twitter, just how things were shaping up for potential downside. The monthly looked a little bit bearish there, okay, in August, and we were subject to potentially filling that wick and resuming to the downside. And that really started to come, where I put out a tweet I just noted about this JOLTS job openings last week, where it sets a bit of a tone. It sets some sentiment heading into the key non-farm payrolls. And the amount of job openings there was lower at 7.67 million. That's why the dollar dropped. If you go on a daily, fundamentals first, then the technicals, okay? Okay, so you look here, we had the JOLTS job openings on Wednesday, all right? And this was all important because it was setting a tone heading into the NFP data. And remember, I tweeted this. I said, this has dampened sentiment now. This is really, really key. Inviting some downside pressure for the dollar is vulnerable, right? And it just sort of took us to that, just viewing that monthly where we had room to potentially fill this wick to the downside, go and challenge those lows of August. And I'm going to talk about everything technically again in a moment, but let's just sort of focus on just this quick recap because it's very important in terms of painting this picture. So stay with me. So JOLTS job openings, only 7.67 million jobs were added. The previous was revised lower as well. So missing expectations and the previous revised down. That's dollar negative. So you can see here, right? Things are quite interesting because we were trying to break through resistance around this sort of 101.80 towards 102 area. We ended up actually forming a bit of an evening star, and then obviously selling coming into play. Okay, macros drove this to the downside, selling coming into play on this poor JOLTS job openings. Then we had some additional selling on Thursday as a result of poor ADP employment change. We only had 99,000 this is privately conducted payrolls, 99,000 jobs added there in terms of the employment change, and the previous revised lower again. So we've got a double whammy of bad labor market data, and you see how the dollar is just coming under pressure heading into that non-farm payrolls. Now, in terms of non-farm payrolls itself, the jobs data on Friday was mixed, guys, okay? Because average earnings is higher, it's inflationary. The amount of jobs being added to the economy was weaker, less jobs being added, and the previous was revised down. So that's negative when we've got less jobs being created there. But the unemployment rate dropping down to 4.2%. So we've got two key things here in terms of two key positives: higher wages, low unemployment, but less jobs being created, and the previous revised lower. So obviously, you can understand why we had this mixed reaction. Look at how the dollar finished there on Friday. We had initially spiked to the downside. Look, just put this on a 5-minute chart. Just see the data on Friday there. Okay. Let's go all the way on 1 minute. Okay, just so you can really see the reaction. So it's a whip to the upside. Okay, and that whip to the upside probably was on the average earnings headline. People saw, oh, higher earnings, but then lower jobs being added to the economy, previous revised lower. So we sold, and then we end up paring back that move quite quickly and reversed it because it's a mixed report. And that's why on that mixed report, the dollar ended up finishing just about in a green on Friday there. You know, as you can see, we staged a rebound and finding decent demand in this heavy area. Okay, this is a decent area of demand. We've gone over the significance of this because this is where we commenced the upside trend at the start of 2024, late 2023, start of 2024, we started picking up pace to the upside. So this area is absolutely key. Now, the way the dollar's shaping up at the moment, just heading into obviously this big week, right, on Wednesday, well, that's where a lot of the attention's on. Dollar's catching a bit of a bid. Now, I want to just talk about this quickly for a moment. It's really important that you stay with me a minute, guys. I'm giving you a lot of value here that I just want you to think about, okay, in time. Now, you see how we had a bit of a slowdown there. We've effectively getting a slowdown. The data is not as bullish as it used to be in the United States. Remember, we were getting these bangers. Look at this run of bangers. Like, we're hardly getting any misses of expectations. Look, banger, 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 miss, banger, miss. Like, it was overall banger, banger, banger. Data was just so strong there for the United States. But now we're clearly getting slowdown because we're getting more, you know, occasional misses. We're getting slowdowns, as you can see, in other major data points as well in the United States. So markets are fearing that we're potentially heading towards, you know, that economic downturn, this new cycle, which, again, this is a whole different video. And I'm putting a lot of content together on this. I'm working away on it at the moment, guys. So stay tuned on the next video, on this next video that I do on YouTube. Okay, there's going to be full instructions about everything. Okay, there's a lot of value coming out, so I want you to you know, just wait for that video. Okay, you must watch that next video because all the details are going to be there about the value that's coming to you guys. And if you want to participate, you need to listen and be ready. Anyway, back to this. So we're clearly seeing a bit of a slowdown in the United States on a data level. So what could support the dollar is at some point, this is why I mean this dollar, the sell-off, this could be potentially the last drop. Okay, and I'll talk about that in a moment, because of the fact of safe haven flows. Remember when we've got economic downturns, right? And it wouldn't just be the United States. We've got other slowdowns. You know, you see the Eurozone, manufacturing and services slowing down, growth is generally slowing down. Canada, we're seeing a bit of a slowdown, potentially the UK slowing down. Other major economies are slowing down as well, but everyone's just so focused on the dollar right now, so focused on the FOMC. But as soon as they start seeing and averting their attention away from the United States and start looking at the bigger picture, because the markets can be narrow-minded. And right now we're just in this narrow-minded phase. We just want FOMC dollar, FOMC dollar. But as soon as markets start opening up their eyes and seeing, okay, we're seeing a slowdown there in the UK, we're seeing a slowdown in the Eurozone, in Canada, other major economies, that's a potential global recession, not just US. We're not so fixated on US on a global level. So in times of everybody seeing downturns, where do we put our money? In safe havens? Yens, okay, which again, I'm saving this for next video, into a next video. Yens, Swissies, and dollar is obviously a safe haven as well. So the dollar does have a chance at some point when this downside stabilizes, really, really stabilizes, and we stage a rebound for upside pressure. Flows will pick back up into the dollar as we start to see fears globally. Flows will pick up into the dollar as a safe haven. Now, if you look here on the greenback near term, for the greenback, we have staged a bit of a rebound here. As I say, on Friday with that reversal candlestick, you could view this almost as a bit of a double bottom near term. Okay, one bottom, two. Either way, let's keep an eye. There's heavy resistance, heavy supply here, heading into the psychological 102. But we could be staging a bit of a rebound, you know, a bit of a double bottom, breakout retest, and then push, maybe go for another challenge in towards 103. We'd need to do that quite quickly ahead of, obviously, this CPI figure from the United States due on Wednesday. Okay, now let's just quickly talk about the CPI number, and then I just want to touch upon euro as well and some of the dollars peers quickly. As with a lot of this, though, guys, and trade ideas, we go into full detail every single day via the TFTC with our market rundowns, tying in what's going on in terms of latest news, latest fundamental themes, any news flow, any economic data point, and just tying in and looking for trade ideas, looking for trades to execute, to go hand in hand. So you can check out that if you want to, description, link in the description. Inflation here, what we need to really focus on is on a year-on-year level, on an annualized level, because on a month-to-month, we've got short-term, it's short-term, right? There's more variables in there that influence it, you know, energy prices, food prices that are volatile. But if we look at an annualized, it gives us a bigger picture of where inflation's going. Is it sort of to the downside? Is it heading north? And of late, when you look on the year-on-year, we've been slowing down the last few readings. Look, really, this one. Okay, 1, 2, 3, 4. Back to back, we've seen cooling in inflation, which is every right as to why we're seeing this dollar slowdown. And if you look here, guys, the real slowdown, you know, June, right? Look here, we had a last little push to the upside. Okay, July reading, once we get to 3% mark, dollar starts selling, picking up pace to the downside. August, you know, selling. Obviously, it's amongst other things, as I explained, those three key pillars, but you could see the intensifying of that with the latest readings there in June, July, August, for the dollar to just sort of trend to the downside. Okay, so with this CPI data, if this does cool, okay, it needs to come out ideally below this 2.6%. If it does cool, this push that we're seeing to the upside for the dollar, we will head south. Okay, our downside scenario would be to this zone here. Okay, we'll see quite a drastic drop, maybe a little break retest, and then drop. It'll be on the daily, and we'll drop into this next zone. Okay, and we were last here in July 2023. This is really important, guys. So that would be our downside scenario. And I really do believe it would be capped there. Okay, and the reason I think that downside would be capped is because if we just look at the FOMC expectations, markets, right, the probability of this is a 50 basis point cut, taking a rate to 4.75 to 5% range, the target range of the rates. This is what the large expectation is for them to take the target rate to a range of 5 to 5.25%. So 75% probability of a 25 basis point cut, a 25% probability of a 50 basis point cut. So you see the large expectation is for that. I don't think the FOMC will want to cut by 50 basis points. They'll want to observe data after September. See how we, after this cut. They'll want to observe in October, you know, data. They don't want to rush. If they just throw a 50 basis point cut at the markets will panic as well, bear in mind. Trust me. Markets think, crap, why is FOMC cutting by 50 basis points? Stocks will probably, after a little whipsaw higher, stocks will sell because markets will panic. They think, why the hell is the FOMC cutting now by 50 basis points? Should we be worried about something? Do you understand that? So I don't think the FOMC are going to do that. So if we get any dollar downside from Wednesday, I'm giving you scenarios here. Okay, so stay with me. If we get a lower CPI on Wednesday and the dollar sells off, it will be capped. Okay, we will find demand here. This will be it. It'll be over. Okay, the dollar sell-off will be absolutely over because the FOMC, as I say, on September 18th will not be cutting by 50 basis points. I strongly believe that it'll be a 25 basis point cut. They're not going to surprise the markets. So the dollar will bounce because 25 basis points is largely priced in. I cannot stress that enough. Largely priced in. So, yeah, obviously, if CPI ends up coming at 2.6% or even 2.7 in line or even above expectations, you know, this push into 103 is going to be very likely. And that will be the stage of the rebound for the greenback, you know, from Wednesday. Okay. Either way, Wednesday is a pivotal, Wednesday's a pivotal day. Okay, heading into non-farm pay. Heading into the FOMC rate decision. Now, if you look structurally, I just want to point something out quite key here. We've been printing sort of lower highs and lower lows, right? You can see the way we're just sort of trending to the downside. And ultimately, we need to break out of this structure as well to be like, okay, the dollar is out of this bearish trend. We're going to be pushing to the north. But as I say, things will become a lot clearer on Wednesday, right? Despite that, obviously, with this dollar stage rebound, there's still opportunities to capitalize on. There was one this morning that I capitalized on. Okay, just a very simple short with euro. Obviously, on a daily there, we were bearish candlestick, ran into heavy supply in that 111 territory there. You can see that zone drop down to the 4-hour. Overnight, price action was bearish. We formed this sort of pennant, which you can see very, very clearly on the 1 hour here. Look, price action consolidating, subject to a breakout to the downside. I ended up entering once I saw this committed break below this pennant, and then sort of taking a trade into this next demand zone down here, is just targeting that psychological 110 sort of 50 area. Okay, we had some demand there. So still opportunities up for grabs, despite obviously markets being a little bit hesitant heading into obviously this big week and next week, right? Now, I'm not going to talk about euro because we do that. We've done all that. We've got the big ECB rate decision this week where they're expected to cut by 25 basis points. This is wrong, by the way, this median expectation. They expect to cut rates to 4% from 4.25%. But I've gone over this via the TFTC in terms of my forecasts for this. So you can, obviously, if you're part of that premium community, you can check that out. But yeah, guys, just sort of back to dollar, a very big week. I feel like I'm blabbering on, giving you enough energy. As I say, in next video, I'm going to detail and outline a plan about some content and some things that are coming your way. Okay, with regards to, because I've been, I'm not scaremongering. I'm just presenting facts and the large possibility of this economic downturn, this new market cycle that we're entering. So we'll go into a lot more detail around that. But just stay tuned for that next video. As I always say, guys, if you found value in this video, do smash up the subscribe button, smash up the like button, drop a comment below, because as I say, it always helps incentivize me to want to produce content for you. If you want to take your value, your knowledge, excuse me, to the next level and really, really be able to grasp those macros and tie them in with whatever technical strategy you're trading to really complement them and give you an extra edge. You need an edge. You need to find an edge in these highly competitive markets. You can check out my fundamental bootcamp, a ton of value there. Other than that, stay lit, stay blessed. Let's get it.